Good afternoon, everyone. Good afternoon, everyone. Can you hear me? Right now, I'm not showing my camera because I'm a little pissed off right now, and I'll show you why. But can you hear me okay? Great. And I'll show you what I'm talking about. Now, I love trading and I like having theories that work. And I'm doing a stock twitch Q&A right now for like 3 hours where I'm trying to answer everything. And a number of people asked me all about like, how do you stay on the correct side of the market during the day? So I'll show you a good one that I messed up. I'm not perfect. It was a great idea and I missed it. And I'll show you what we're talking about. So here is Meta. Now, the first thing is the theory. So the theory is that Meta outperforms when you have like rumors of war between US or Iran or all that over the weekend because more people tune into social media. So that was our theory. But the theory is you can't do it on the way down. So I use this thing called ATR trailing stop. So I wish I could put it in. Here's a link, but I can in the essentials room. So let me show you what I'm talking about. So I'm going to go and put this in for you so you know what we're talking about. There's your ATR trailing stop. And this is the ATR trailing stop if I can't do a link. So I just use 9 and 2.9. So I'll show you that when you mess around with it and why I'm banging my table. Because when I saw this start to turn, and this is what I mean by turning, there's two types of turning. So one of them is when you see it over the ATR trailing stop ultra short term. The other turning is when it acts better than the rest of the markets. So let me show you what we're talking about. And like I said, uh, yeah, I'm glad you didn't hear me banging the table. So this is what I want to show you. So here's the NASDAQ, and here's the NASDAQ getting pounded. So as you see, the NASDAQ was trying to test the lows right here, right here. That's at 1103. What do you notice about Meta? It was already forming a bull flag. That's why I posted that I was trying to do a bullish pattern in Meta and I missed it. We did one, we lost a little, we made great in Apple, and we're doing great in XSP, but I missed this. So just to let you know, I missed that, but there's a perfect setup. Active better than I like to have 3 reasons. Love to have 3 reasons. So let me give you some of the reasons. Number one, it got over the ATR trailing stop. Number two, it was acting better than the NASDAQ. And number three, and this is something else that somebody asked me on Stock Twits, what do you combine? So one of the things I combine is just experience of how Meta acts in a geopolitical mess. So just keep that in mind. There's another thing to watch. Is anybody watching gold? I'm telling you, the lower that gold goes, because everybody's worried about geopolitical stuff, the more the AES is going to rally. So here's another correlation. I'm really into correlations. So when I watch Meta that should go up anyway, and watching gold go down, and Meta forming a bull flag, and Meta getting over the ATR trailing stop, well, that did it for me. So did I initiate correctly? When it goes like that, the problem with some of these spreads is they just make them wide. But that was pretty exciting. That's pretty cool to watch Meta go straight up. Well, everything else went straight up too. Don't get me wrong. And that's the other thing. We have this that we share on Chart Patterns Mastery about if something is over the ATR trailing stop, it turns green. Well, heck, they all turn green. But Meta turned green before the other ones did. So just, definitely keep that in mind. Definitely turn before the other ones did. So that's why I liked Meta. And like I said, that was a good way to go. Now, keep in mind, I'm not buying on the way down. But once you saw gold, and you should really could put whatever is moving the markets. So gold is moving the markets. Just, keep that in mind that everybody's worried about the whole gold thing. And I totally, and gold exploding. But my goodness, look at this gold. I don't know about you, but when you look at a monthly, this sure seems extended to me. So just keep that in mind. So how do I trade it? Don't laugh. I just don't trade it over the weekend. But what I do want to trade is playing something under the market, the old buy on rumor, sell on news. This is really extended. Now, there are a couple of other things. I'm not going to trade it over the weekend. Just want to make that clear. Now, I will tell you, even though it's sort of counterintuitive, the more that the bonds go up, they're not now. They're selling off a little because maybe there isn't going to be anything over the weekend. But the more they go up, the better it is eventually for the Russell. But as you see right now, the Russell's acting terrible. But later. So is there something to do in gold? Well, I think there is something to do in gold. So what I'm looking at is this. Give me a second. Like I said, I'm also doing a stock twits. I'm doing a stock twits question and answer. And I got to tell you right now, the first thing about this is definitely combining different factors. So the second that gold sold off, that to me was a good tip off that this wasn't going to crash on the upper left. So it doesn't mean it has to go up, but it wasn't going to crash. That's number one. So definitely I try to combine what's moving the market today. So when gold started selling off, or GLD, right there, 1103, isn't that amazing? Yeah, everything bounced. So now that gold rallied, the markets are selling off, not a lot, but somewhat. And that brings me to your next question. Well, the same question, 007. It's nice to see you too. Is what do you do over the week? Let's say the last hour, and I'm on the last hour in the chart patterns mastery in the central room. What do you do the last hour? Do you play it to the downside, figuring nobody wants to be long, or do you just use the gold? Well, I'm telling you, if gold's down here, well, then it's more likely the markets aren't gonna get killed on the close. The other thing to watch, and there's a number of things to watch. Here's one of them. You're watching gold right here. So in fact, I'm going to put up a 4 grid so you sort of know what I'm talking about. At least I think it works. So I'm going to take this, but I'm going to make it all 1 minute. We can make it 2 minute. That's fine. And what we're going to do is take the ES, which you see rallied, the gold. We're going to take then what stocks are moving the most. Well, Meta, yeah, I missed that. But we'll probably have another chance. But right now it's 516.66. That's a bad sign to me. But the other thing I'm watching is defense stocks. What do you notice? They're correlating with gold. Isn't that amazing? So when the defense stocks sold off and gold sold off, I'm going to put these all on 2 minute. I'm going to save this, by the way. I always mess this up. There. So when gold sold off, the ES rallied somewhat. But when gold sold off, so did Northrop and Lockheed. Isn't that amazing? So you got to know, the geopolitical news. Somebody asked me, do you care about fundamental? I care about fundamental tremendously. I think anybody that says it's only charts is crazy. So correlations, charts, geopolitical, and how it's affecting markets. So you could say whatever you want, that there might be some attack over the weekend, and that's totally fine. But if you don't want to believe in that, wait for some cross. So you're combining it with charts, no doubt. But I'm watching the Lockheed, the Northrop, and the gold. And you're going to notice the lower they go, probably the more stabilization you're going to see in the ES. Doesn't mean it has to go up, but the more stabilization. And I wish I could say, I could show this about this chart. Let me see if I could share it. So 007, do you want this chart? Let me know if you want that. So not anything proprietary, just a simple correlation thing. So let me know if you want that. And now this is a Thinkorswim share link, which is a pain in the rump because most have Schwab. So I'll show you a little trick when it comes to that if you haven't seen it before. So here's a 4 grid. This is just, now you might say, but you can't fit a lot on it. I have a lot of more grids up. I'm watching a ton of stuff. But at least this sort of shows you that the more that these sell off, the more this is going to stabilize. That's all I meant. And that's exactly what's happened, at least so far. So where else are we going to go with this? Well, number one, that's a 4 grid. Now the next, and let me see if I can share that in the YouTube live. But I never go and buy out of the money puts. I'll do it as a spread under the market. But when I was on the floor, I hardly ever bought premium. I sold it. That's why you see somebody like Sosnoff, who isn't right that much. I've never seen somebody that isn't right that much and makes a fortune. It's because he sells premium. He doesn't buy premium. So that's what the market makers on the floor do. So I'm never buying out of the money stuff. I'll do spreads under the markets to take advantage of the death of the middle strike. I'll show you for instance. But first thing is, what do you do like 007 when I show you that link? But it won't work on Schwab. So you go to Notepad. And what you do in Notepad is you go and open Notepad and you wait a day. So you take that link and you just wait till over the weekend, and then you can open the shared item onto Schwab. So just to let you know, that's a little trick. So in there. Now, the next thing you were asking about put premium. Well, let me show you. So this is what we did today, and I'll show you what happened to the middle strike. So we did this on the opening. We were betting on the market going down. So we did this on the opening, the 515, 518. We did this for 69 cents. We're still in it. This is betting on the middle strike, losing time premium. See that at $1.04? We did it 69 cents. 69 cents. Right now it's $3 in the money. But what you're going to notice more is that the S&P, the XSP or the SPX is near the lows, but this is sold off 50%. That's what we want. We want the middle strike to die. So just keep that in mind. That's for today. Now for next week, well, I think that you could try to take advantage of a volatility pop, maybe. But really, you trade it today. Now, do I get out and we make almost or double? Well, if I see gold do this, so I see gold do this, and out of nowhere, I see gold just plummet, then I'll probably try to get out of this. As you see, the lower the gold goes and the lower the Northrop and Lockheed go, the more the ES, it doesn't mean it has to go up, but it stabilizes. So we want the middle strike to die. But I'll tell you right now, if this has another leg down, which is real possible, if this has another leg down, then I'm probably exiting what we have in the SPX. So just keep that in mind. The other thing, and I think it's a big deal to go over. Yeah, but I'll tell you, Sosnoff has made a fortune. He has a basketball court in his house. Pretty cool. So I used to golf with him. So, but yeah, I'm telling you though, he is an expert at finagling premium. So just keep that in mind. So, in there. So, like I said, desktop, Papillon. Now, if you're in Chicago with desk planes instead of day planes, maybe I'm supposed to call you Papillon. So it depends where you are. So if you're in Chicago, that's sort of an inside joke. So, but definitely the one I showed you, you got to wait a day. So it's Papillon. So no, just joking with you. But if you're going to play a intraday, a buy on rumor, sell on news, then you got to wait for that cross. Because if you had that theory up here, you get yourself smoked. So just keep that in mind. That's the way I look at him. Papillon, I traded on the floor for a long, long time in the IBM pit in the CBOE. So if you know anybody in the IBM pit, let me know. So in there. USO, well, I can't give specific stuff, but same thing. Buy on rumor, sell on news. What's USO doing? I bet it's selling off. Yeah. Isn't that funny that slope is very similar to Lockheed Martin? So if that's going down, then this is probably going up. Isn't that amazing? Because why did the ES go down in the first place? Because of geopolitical tensions. So if gold's going down and crude oil's going down, then the ES is probably going to go up. So, and that's why we were messing with Meta anyway. In fact, give me a second. Yeah, chart patterns mastery. I'm going to try to take, if you're in here, and I got to go post it in there, so give me a second. But I'm trying to make our 50%, more than 50%. I'm getting a little nervous about the market rallying too much. I might. I'm watching this like a hawk on a different screen. If I see these start to bounce, then I'm more likely to stay in the SPX we have around 5150. That's where we are at the moment. If, as you see, they're going up, Meta's going up. In fact, I need to tell Chart Patterns Mastery where I have in my sell order. And I might get out real quick. So if you're in the Chart Patterns Mastery, the thing we did, so we did this one. So we did the XSP, this one right here. We did it at 69 cents. Now you might ask, this is a 10th of the S&P. Now I was pretty sure you're going down, and I should have bought the 10 times, but it's $6.90. So we just did this one. So I'm telling you, if, remember at 516 and a half, it's still worth $1.50. But I'm nervous when I watch the bond sell off, the gold sell off, and the crude oil's up, but it's not up like it was. So in answer to your question, longer term in crude oil, well, I'm not going near it on the downside, but I would tighten my stop on the upside right in this area, which means probably go to like a daily chart or a 4-hour. And if it gets under some moving average price, stop yourself out. That's what I do. Joe Granville wasn't on the floor, but yeah, of course I know Joe Granville. In fact, when I started on the floor, he was the one that put in, the sell signal that was the bottom. It was the bottom in 1982. So highest volume, markets got killed, highest volume ever, and that was it. So pretty interesting. So chart patterns master, if you're in here, I'm still in the XSP. So just keep that in mind. Oh yeah, and so that's what we're in. I don't see a reason to get out yet. So if you're in it, Penn. So Penn is one of our loyal subscribers in the Chart Patterns Mastery and does so many helpful posts. Penn, I can open 3 different rooms. If you'll tell them that as long as gold stays in this area and oil where they're up, I'm not going to get out of that XSP yet. But I am close to getting out at like $1.17. But if you'll And just so you know, I took a hit on not like that. I didn't take a hit like that. I'm talking about the internet took a hit. So you might have lost the audio for one moment. So but I'm not getting out yet, Penn. So gold, I'm getting a little nervous about being in even a neutral position in the SPX, but I'm still in it. So we have a wide berth, but you get into $1.17, I'm interested. So I just want to make that clear. But if I see gold really take a dive, yeah, I might change my mind in there and get out. So just to let you know, Penn, right now it's $1.09. Now it looks like it's all over the place. So if you're playing XSP, all you do, because the quotes are tighter on the SPX, is all you do in here is you look at this and divide it by 10. So we had this for $690, basically $690. We did the whippy way to do it. You see on how it's 10.95 right there. That's why Penn, I'm looking at $1.07. I mean, the most you can make is 30 points, but that's being a little piggish. So definitely looking at dividing by 10, about $1.17. So I've just seen it stop there before. Like that's like 12. So in fact, I could just put an alert and say, is the mark at or above 11.90? And I'll get a text on my phone. So does everybody know how to get the alerts? So can you hear me now? I'm hoping you can hear me because I know it went out for a minute. Just let me know if you could hear me. Good. Good. So, hey, Mandy, I hope you're doing well. So, in here, Microsoft's color is green because that's a 1 minute chart. That's a great question. So, I'm not allowed to share that proprietary thing on YouTube, But basically, if Microsoft ultra short term is over the ATR trailing stop, then it turns green. That's why it gives you a good tip off if you want to be long or short if the group is all going up. But as you see, they're starting to get under it again. So that's how it works in there. Now, I'm telling you, if you put in a daily, yeah, it's probably red. Nope, it's still over the ATR trailing stop barely. So how about on a 1 hour? Yeah, there you go. It's under it. But we're using 1 minute intraday. And I'm telling you, the lower that gold goes, it's holding up. So it's unbelievable the correlation today. One of my strengths over 43 years is correlations and knowing what to correlate about. So wire markets down, you can say all you want that yesterday was a short squeeze, which I told everybody it was, but you had the geopolitical stuff overnight. So the key is if the markets went down on geopolitical stuff, then all of a sudden, if you see gold start to sell off, then ES is probably rallying. Now, what just happened? Yeah, gold rallied and the ES sold off. Isn't that amazing? I'm telling you, the key is to know what to key off of that day. So right now they're keying off crude oil, probably, and gold. Yeah, crude oil trying to stabilize, but I'm going more on gold. So just, keep that in mind. So, trade forever. Yeah, definitely. I hope that helps. Hope that helps. Give me 1 second. No, in fact, I could share this also. I'm sharing on Stock Twits, and I'll share it with you because I think it's important. So here's a 6 period. A lot of people ask me what time frames I use. So here's one of them I use. So I use a 6 grid with multiple time frames. 6 grid with multiple time frames. Now, if I'm day trading, I'll make this probably 1 hour, 15-minute, 5, 2, 1, or something like that. But I can do a share link. I mean, not a share link. I can do a share image to show you. All right. So here. Now, I can't in the YouTube put that in there as a link, but at least you could see it. Daily 4 hour. This is normal. Normal. that. So just to let you know, that's a great question about have I cleaned any toilets lately. The joke in there is if I have a bad day, I go and clean the toilet, so it keeps me from doing, having bad days and being more disciplined. So no, I haven't cleaned any toilets. They're filthy right now, young. So just to let you know. So as you see in here, you see that gold's done nothing up at the upper right. Crude oil's done nothing. So the ES has done nothing. So that's good for us. So you go back to that thing I was showing you, the SPX, and the longer it stays here, the more the middle strike loses premium. So keep in mind, this is still near the low, and the 5150s is sold off 50%. So, Penn, I'm still looking at this. We have that wide one on. The reason I did a wide one is geopolitical stuff. It hasn't really, it's 110. So I'm probably going to look at 11. 110, 111. I'm not going to be picky here because the markets are acting like they want to have one more leg down. So in answer also about when do we start a correction, because somebody asked me on Stock Twits. Man, I'm getting tons of questions there. You better watch that. If you're waiting for a correction, you're waiting for a cross of something like an ATR trailing stop and a horizontal line you can draw. And also, somebody asked me about this. How did I come to the conclusion about the divergences? Well, here's two of them for you, but I'll give you just the bonds. That's a big old divergence right there. Look at that. So somebody has asked me, how did I come to the conclusion that bonds are a huge danger sign? And that's one of them. Look at that divergence. That usually doesn't stay like that. So it did here. And a lot of that is seasonal. But here, I love showing all these and sharing them. So let me share all this as much as I can. So that's one of them. The other one, let me see if I could do this. I use debit spreads all the time, just to let you know. I use debit spreads all the time. Now, a lot of times I do butterflies and I'm too right. So you're dead right about, why aren't you doing debit spreads more? Well, yeah. But if I see a definable pattern, I'm much more likely to do a debit spread. So just keep that in mind. Much more likely. Now, there are a couple of real cool graphics I'd like to share. I don't think I can share it on the YouTube, but I can share it here and you could just look. This is the price performance. On the Chart Patterns Mastery, I do Sunday, Tuesday, and Thursday night. I do charts, nightly charts. And this is one of the things I have as a sticky that's there every day. So you see the price performance in an election year. Yeah, there's April and May. Look at the percentage in April of positive months. Not so hot. There's a lot of positive months in May, but the average is 13 down 0.13, which means you have a lot of bad days. So let me share this with you if I can. I can't do it in the YouTube room. I wish I could. All right, that's one cool one. Here's another cool one. That's every single day of every single month since 1950. I dislike when somebody uses like 1990. As heck, you've been in a bull market most of the time forever. I like the farther out you go, the better. So I was not trading in 1950. I just want you to know that. So let me share that with you. There. Now, those are pretty cool. And let's see what gold's doing. Nothing. What's going on with these? Nothing. So, Penn, if you want to tell them, I'm probably getting out here. Because just now I tried to open multiple ones and the screens went out. Yeah, $1.10. I gotta take $1.10 on the other, because what happens if that's only down 28? If there's no war or whatever. Yeah, you'll lose money being right. So I put in $1.10. Now keep in mind when you trade the indexes, you are going to get so mad at yourself because you're going to make money and then you're going to be mad because you didn't make enough. And then you'll be thrilled because it went the other way and you would have lost. And then it goes your way and you're mad because it went even higher. So Penn, I put in to sell it at $1.10, but I'm about to change it to $1.12. But that's what I have in. So, but in answer your question about thanks, Penn. In answer your question about debit spreads, because somebody asked me, if I see this, I don't know about Apple, but if I see this up here, see that? Not because of negative divergence. I'm looking for a tight pattern. So, and close to the ATR trailing stop, I'm more likely to do a debit spread than a put fly. So just keep that in mind. A put fly is a debit spread, but I know what you mean. So just ask Chart Patterns of Mastery of how many times we've almost had things overshoot. So if I see slop, that's slop, then I'm more likely to do a butterfly on the direction. If I see this, I'm much more I'm much more likely to do a put debit spread, like a vertical debit spread. So just want to let you know. DXY breaking out. I'm telling you, I don't even have DXY up here. So wait a minute. Penn, if you want to copy and paste this is what we got out. Heck, how much of a percentage is that? So we bought it 69 cents. What is that? 41 cents, $41 on a $69 investment. Not bad. What is that? 60%? 65%. But if you want to let them know by copying and pasting that would be great. I'm going to try to go into the room and hope I don't blow up my computer or the internet. So let me try to do that. There. I put it in there, Penn. So thanks. Yeah, but I put it in. I mean, that's a good trade. We got stopped in Apple once, then we made money in Apple. But in answer to your question about call or put debit spreads, you see a bull flag like that. And that's where you want to do a call debit spread. If you see that tight pattern here, Darn right you want to do a put debit spread or a butterfly under the markets. Just keep in mind that was violent. 25 points in like a half hour. So unless you did it way under the market, you could get yourself lose money being right. Very interesting. So thought you'd like that. So, but I wanted to show you and answer your question about DXY. So let me just show you what I'm talking about, why I don't even have it up here. Keep in mind the DXY went straight up yesterday and the markets went straight up. So I just don't use the DXY. The other thing is the DXY just had a massive rally. Well, it's selling off now, but gold had a massive rally. DXY sold off, gold sold off. I just find that fascinating. So I mean on how, yeah, I know it's geopolitical, but if I go over DXY and I put it up here on a weekly, there. That's a weekly. So what happened? The markets went straight up here, straight up. The S&P went straight up. So I just don't go on that. Do I think it's an accident waiting to happen for gold? Yeah. But I'm just telling you, I just don't use it as an intraday tell. I don't even have dollar up here. So just to let you know. And this is exactly what I'm talking about, that I'm going to get pissed off that I got out of XSP too early, Pen. But when you trade these indexes and you trade end of day, it's not a perfect science. So you're trying to, 40 or 50%, I'll take any day. But I'm definitely going to leave stuff on the table. On the other hand, this is what we did yesterday. So I had to go to the doctor. Now, just for pre-op. So I'm having a knee operation. And I'm telling you right now, most of the time when I go to a doctor, the markets do exactly what I think it's going to do. But yesterday, we had on this. Yesterday, we had on a put fly right on the opening. So our theory was if the markets close on their low, if the ES opens up, it's going to test the low at least once, which is what it did. We got out right here. We bought a put fly at 335, sold it at 410. It's right on our chart patterns mastery. So right in here. It then went to 5. And then on that blip, it went to 0, like in 10 minutes. So I'm just telling you, you try to just make the direction correctly. So just keep that in mind. So that's where I am at the moment when it comes to the markets. To me, this is what I'm also watching. Now, let me just tell you, a lot of people ask me what a short squeeze is. It's how do you identify it? You don't identify a short squeeze. You feel a short squeeze. You feel it. So if you're short here, you feel the short squeeze. I'm not going to get into how you feel it, but just keep in mind that that's typical after a breakdown. So after this, I'm going to clear this drawing set. After that big old sell-off on Thursday of 2 weeks, a week and a half ago, a week and a day ago, all you did was rally to this area. Right there. Big old short squeeze. Now, another way, somebody asked me, do you use volume? Well, one thing on a short squeeze, you're looking to see if uh, a short squeeze is more likely to happen on low volume. So go and check this out. You'll see it. There. That's how you know it's a short squeeze. How on earth can the ES go up 8 million yesterday and the volume's lighter than the day before? Look at that. Also, another thing. So to me, that was a short squeeze. The other thing, and I'll give you some trader mistakes. I don't use volume hardly at all. I use it. Sure, I'll identify a short squeeze. No doubt. But I want to show you some things that I think more traders bust out doing. So I love going over this because I just think it's a big deal. Number one, markets going up on low volume. Markets can keep going up on low volume. I only use it to identify like a short squeeze in hindsight. But when I saw the low volume yesterday, I was definitely looking for reversal patterns on the downside. The other thing I see, and I bet everybody knows this one because you watch it on CNBC, rising wedges. Yeah, it might work this time, but look at all these rising wedges. Holy cow, all the way down. Look at that. Rising wedges. Rising wedges. What's that mean to me? It's not the wedge, it's the break and then the consolidation. So you want to see this. If you get a break like that big reversal candle last week, you want to see what the oversold MACD does. As you see, it went back to zero and this didn't go to a new high. That was a big tip off. So rising wedge, that's one way I've seen people bust out. What else do I watch? The Bollinger Band. I can't tell you how many people think you short at the top of the Bollinger Band. How would that have worked? In a trending market, that's a good way to get yourself hurt. Good way to get yourself hurt. You short right there, you lose 7 points in the S&P real quick. So just keep that in mind. Now, there are a couple of things I watch closely, but you have to put them in context. And by the way, the overall market, why is it going down? Well, guess what? Not just gold, but the bank stocks. They acted like dirt with their earnings. So that's one reason. So that's one. So I just want to show you that. Now there is something, and somebody in Chart Patterns Mastery asked me about it, and it worked great. So what are we talking about? We're talking about the VIX and its Bollinger Band. So most of the time, when the VIX gets over the Bollinger Band on a daily and closes under it, it's a buy signal for the SPX. But not now. You might say, well, how did you know that? And this is where it's really a give and take on our site. And somebody alerted me to it. If the 200-day moving average on the VIX is starting to turn up, this is much less likely to work. So I'll show you what we're talking about. This was posted actually on the Twitter feed a while ago. And you see that chart here. But let's go take the VIX. I always mess up what the VIX symbol is. There. So I can take off that bond thing. You already know what it looks like. There. And what we're going to do in here is put the 200 moving average and none of the other ones. This on a daily. You're going to see what happened. Look at that. You see on how it started to trend up? So that to me means like a bullish signal is less likely to work, which is what happened. It's much less likely to work. So see that turn right there? The last time it did that, look how far back it is. You still can't find it until there. That's January of 2022. It hasn't had a turn up since then. So I want to copy and paste that so you have that. Now that's showing me that the trend is down, combined with a horizontal line you can draw on the S&P. So, but let me see if I can copy and paste that in here. I'm having the toughest time getting this to work for you. You're going to have to go to our site because I don't think I can embed something, just to let you know. Somebody on the stock twits asked me, like, what books to recommend or how do I figure these things out? Well, one is to do the $7 30-day trial where I go over all these. Because I got to tell you, I don't know hardly anybody that's using all these correlations between gold and bonds and charts. So it's not just charts. It's not that easy. You got to combine it with correlations and stuff. I mean, at least that's what I do. And I don't see that in a lot of books, but any book by John Murphy is really good. So just, I mean, he does technical analysis of the futures market, and that's pretty good. So if you're going to do one, but I love correlations. So if I watch gold sell off, which it is, and crude oil selling off, but then these aren't bouncing, well, that's pretty bearish. That's the way it looks to me, that they couldn't bounce. So, like I said, gold is more of that buy on rumor, sell on news. At least that's how it looks to me. And this is the other thing. So this is just a simple chart. All this is the this moving average, which is the 20. You can put up the 50 also. I like the 50 for longer term trends. But when you look at this, this is the first time you've been able to draw a decisive horizontal line. Look at this. In fact, I don't know when else you could. You know, the more points of contact, the more important. Do you have that in the NASDAQ yet? No. But when I watch what JP Morgan's doing, I have to think that big NASDAQ stocks are going to disappoint. So that's my theory. Now, you don't have to do a darn thing with it, but I just wanted to mention on how important that is. So let me show you what we're talking about. So now, Penn, yeah, it looks like now you get nervous. You get nervous about overshooting. Oh, you know, you can't win. So you can't, you know, now that SPX is still 1.9 in the money. But if that crashes, all of a sudden you'd lose money. So now, what else am I keying off of? Well, I'll key off NVIDIA, which won't bounce on the bottom. NVIDIA led on the way up. But I want to show you another tell that I think is really important. So right now, when I'm watching NVIDIA not going up, I think that's a big tell not to chase any strength. So that doesn't mean you can't go up, but boy, everything turned red except JP Morgan. Now, I'll show you something when it comes to the NASDAQ and why longer term I'm bearish on it. Is this. So I'm going to go and do two charts for you. I'm really also into moving averages. I'm into divergence, like I said, with the bond market and the transports. Keep in mind, the transports are down for the year. So is the Russell. So is the Dow Jones Industrials and others. But I'm going to take this. So on the left is the S&P on a 1 day with a 20 and a 50. You see it's close to the 50. Now on the right, I'm going to go put the NDX. And we're not going to take the 200. We're taking the 29, the 20 and the 49. Now keep in mind, when I do 20, 49, 20 EMA, this is what most hedge funds use. So that I'm using what can be a self-fulfilling prophecy. So that's what I'm watching. Definitely, if this breaks that, then I think this breaks that. So just, that's what I'm watching. So when yesterday the NASDAQ got above it, and you could use the NASDAQ that instead. But when that got above it, that's the future. So almost 24 hours. And on the left, this didn't come close to it. That meant to me that the NASDAQ was going down, which is exactly what happened. So I hope you've liked this. I hope this was enlightening for you. And YouTube Live, thanks so much for listening.